So one thing that drives me crazy when it comes to personal finance is when people are carrying a high interest rate credit card balance and they're also investing their money at the same time. So in 2024, the average credit card interest rate is around 24-25%. So with this being said, the average market return based on the S&P 500 is around 10% on a decent year. So if you think about it, if you had $5,000 of credit card debt at an average rate of 24%, that credit card debt is costing you around $100 a month just to carry it. But if you wanted to keep that debt around and invest that $5,000 into a Robinhood account instead, on a good year or a decent year, that money is only going to earn you about $42 a month. But this is what a lot of people don't take into consideration, and that is, what if another 2008 financial crisis happens again and the market falls, roughly 50% fairly quickly? But situations like this happen all the time in personal finance. And I'm not 100% Dave Ramsey. I don't, believe you have to be debt-free and all this and that, but this is pretty much common sense. So all debt equals risk, but high interest rate debt is just plain stupid and should be avoided at all costs if you can help it. Now, just to be clear, I'm not talking about just pausing the single stock investments, the risky meme stock trades, the Nvidias, the Teslas on Robinhood. I'm not talking about just those trades. I'm talking about all investing. I'm talking about the 401k. I'm talking about the IRA and the Roth IRA. I'm talking about pausing all that while you have that 24% plus high interest rate debt. So over the years, I've learned that a lot of people tend to overcomplicate personal finance, and it's topics like this is why I truly believe we need more personal finance courses in the public school systems. So in summary, I know that emergencies happen, and sometimes the only option is to run up a credit card to get you out of whatever situation you may be in. But when times are good financially, please do whatever it takes to save up a decent emergency fund, preferably 3 to 6 months, so that you can handle those emergencies life throws at you that can be resolved with money. Anyway, I appreciate you watching. Please like and subscribe, and I'll see you next time.